the tax rate hearing meeting to order.
Motion to approve the most recent.
No, that's fine. I start with the Pledge of Allegiance. Oh, do we have the microphones on, by the way? Please turn those on. Okay, I'll call the meeting to order and we'll start with the Pledge of Allegiance. I pledge
allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Okay. I will entertain a motion to approve the agenda.
Motion to approve the agenda.
Second.
Okay, all in favour?
Aye.
Anybody opposed? Okay, that passes. I'll note Mrs. Clendenin sent her apologies for not being able to attend the tax rate hearing.
Good evening.
Good evening.
Good evening.
So we'll start by talking about the tax rate process. Although we'll go over we had a couple things get out of order this year in this process. But normally the district receives notice of the final assessed valuation numbers from the county after they go through Board of Equalization. As we talked at the last meeting, the Board of Equalization is not quite done, so we did receive numbers, but we don't really know how final those numbers are. If we find out they're not final, we may have to do a recoupment adjustment next year to make up for that. So after that, then the district will calculate the tax rate for the state auditor's worksheet. We will then post a tax rate hearing notice. Then the board conducts a hearing as we're doing this evening, and then the board will set the levy. The district then has to submit those rates to the county by October the 1st, and then the county submits those rates to the state auditor for certification. So assessed valuation, as you know, that's a big factor in calculating the tax rate. The assessed valuation went up $142 million since last year. That's a 17.5% increase. That is a large increase. Real estate made up $3.9 million. Real estate new construction made up $3.9 million of that. And that is important because the rest of the assessed valuation is capped at the Consumer Price Index as of the end of December. That number was only 1.9%, but any new construction is not capped at that CPI, so that is good news for the district.
Question. In terms of the assessed valuation for 2019, how do pending appeals figure in? Does that reflect the assessed value of pending appeals, or has that been reduced for those pending appeals?
You know, that's a good question. We've had some of the district have reached out to St. Louis County and said, can you give us a list of all the properties that are still under appeal? And they would not do that. So we have really very little information right now. I'm hoping in the next couple of weeks as they go through the process, they'll be able to tell us, did they pull those numbers totally off, or are they still in there? Because we may have to do, and I was going to talk about that later in the presentation, to do some adjustments to our budget, what we have projected for tax revenue.
Thank you.
So this just shows the history from 2009 to 2019. As you can see, the total's gone up from $727 million to $752 million. The first few years on there to about 13 and 14 for the various categories, we were seeing decreases, but after that it's been increasing. Residential has increased since 13. Commercial was increasing since 2014. Personal property has also been increasing steadily. So that's a big change. We're almost at $1 billion in assessed valuation right now. Then to talk about that recoupment we talked about at the last meeting. So since 2017, since the board approved those tax rates, the Missouri State Tax Commission has gone through and settled some of the appeals that they received on their level at the state level, and they've lowered those assessed valuations. Due to that, the district has lost out on $6,808 in residential tax revenue from 2017 and almost $192 $1,000 in commercial revenue from 2017. For 2018, it's about $16,186, and for 2018 on the commercial, it's almost $197,000 that the district lost. So if the district would have known what those assessed values were when it set the rate in 2017, then again in 2018, the rate would have been set higher due to, as you know, there's a seesaw effect basically between the assessed valuation and the tax rate. If that assessed valuation went down, then the tax rate would have increased. So now we're looking at adding that to the tax rate for this year. So now breaking it down by property classification. So if we look at the residential rate last year, it was $5.36.54. This year, going off of the state auditor's form, is $4.68.17. If we add in 0.0031 of a penny for residential, that comes to $4.68.48. So that's still a decrease of over 68 cents on the residential side. Then on the commercial side, last year it was $5.46.23. In 2019, that calculates at $5.14.42. If we add then the recoupment rate of the 33.94 cents onto that, we have a total of $5.48.36. So that one is going to see a slight decrease of 2 pennies, just a little over 2 pennies. Personal property tax is remaining the same at $6.46.
Looks like it's an increase, not a decrease.
Oh, I'm sorry, yes, an increase of 2 pennies, thank you. Personal property is staying the same at $6.46.99. And those numbers should point out that's a total tax rate. That includes a debt service rate of 56.99 cents. And now,
Sorry, I'm going to ask another question. Are there ever any circumstances when the personal property rate changes?
it would. So the district could look at that every year and decide if that needs to change. Sometimes there may be some changes also in their assessed valuation numbers too that fluctuates. But when I was looking at the district's total, it's been $590 for a few years now. Without the 56.99.
Right, okay. Oh, yes, okay. That's not subject to any sort of CPI or anything else, though?
No.
Okay, thank you.
Well,
very
yes,
much.
it is subject to CPI, so it can fluctuate, but we're almost at our ceiling, too. It's $5.91 is the maximum authorized levy.
And so the reason that it doesn't go down, even though the assessed valuation has gone up, then is what? So if we go back to the assessed valuation, and it's probably just an understanding thing, but so back one more.
This one?
No, the one before that. Or perhaps it's the last one.
This one shows personal property.
All right. Yes, I guess. Yes. So the assessed value's gone up by $8 million, and yet the rate is staying the same. So that it's gone up by sort of 10%, and yet the CPI only went up by what?
Right.
2.
So there's a blended rate in there. First, we have the blended rate, which is basically an average of all the rates.
Okay.
If that makes sense. The district has chosen to leave the personal property at the same rate. Now, it could fluctuate. I know some districts have decided to change that. It's up to the district every year how they want to do that, but you have to stay within that blended rate total.
Okay. So it basically mechanically it works differently in residential and
Yes.
commercial.
Yes.
Okay. All right. Thank you very much.
So now if we break this down by fund, so our operating tax rate is, we're going to leave out the debt service, the 56.99 cents. So the state auditor's blended allowable rate is $4.34.30 cents, plus the recoupment rate that we're adding on of 34.25 cents for that $4.68.55 cents. So in the general fund, basically with these numbers, we've left all the funds the same except the general fund, and we've reduced the general fund. So it is down to $2.49.05 cents. The teacher's fund is the same at $1.79. The capital projects fund is the same, that's 6 cents. 6.25 is the same as it was last year. We're just adding on the recoupment rate of the 34.25 cents and putting that whole thing into the capital projects account. So as we talked about, some of that recoupment rate is from residential and some is from commercial, but we can put it in whichever fund we prefer. The recommendation is to put it in the capital projects fund, then it can be used for some of the Prop E projects that the district would like to get done. So that shows an operating rate decrease then of 23.9 cents. So the debt service fund, there's no change in that rate from the prior year. As you know, the district is able to pay all of its payments with the 56.99 cents. The district, when you run through the calculation from the state auditor's office, you could actually raise that rate by close to 30 cents, but there's no reason to do that because the district is able to make their payments with the 56.99 cents. And here just showing the last 3 years for each fund. So we have the general fund in 2017 was in $3.04 roughly, 2018 $3.07, and then the proposed rate, as we discussed earlier, is $2.49.05. The teachers fund rate staying the same at $1.79. The debt service rate is the same at 56.99. The capital projects, the regular capital projects, $6.25, which is the same, just adding on that 34.25 cents in the capital projects fund.
So you don't anticipate any issues with revenue in the general fund then with that reduction?
No.
Okay.
No. Joanne is in the audience, and that is one thing we talked about, is how what that fund placement looks like and the transfers that the district does. So. And here, just to look at this another way, this is 5 years of the total tax rate. This includes the debt service rate. In 15-16, it was $5.77.68, and it's down to $5.25.54 this year. And as we discussed, that's mainly due to the fact that assessed valuation has increased so dramatically. So projected revenue, estimated tax revenues at $46.1 million. That's about a 1.1% increase over what was approved in the budget when it was adopted in June. That's about $500,000. That would be about what we expect with that 34 cents. In that number, for the $46.1 million, I used the 97.8% collection rate, which is the same number that was used in the budget that was adopted in June. But that's what we may need to think about in the next couple of months as we go forward, is do we need to adjust that if we come to realize and get more information from St. Louis County and we think a lot of our appeals have not been addressed, we may need to lower that collection rate to the low 97s instead of 97.8. But we'll monitor that and make a recommendation before the first budget amendment. Here's a sample calculation of a tax bill. So a home that has a market value of $400,000 will be assessed at 19%. Their tax bill is going to be about $3,500. That's a $500 difference from what that same home would have been last year for just the Webster Grove School District portion. Not, of course, we can't account for the city taxes and the other taxing entities. A business building that's $1 million commercial building, their property tax bill is going to be about $17,500, and that is just a slight adjustment from last year. And then a car is it should be $452, which is the same because we're not changing that tax rate. What are some of the uses of the funds? What do we use these tax proceeds for? They support our educational goals and programs for students. They provide services that are essential to district operations, and property taxes represent approximately 66% of the district's total budget. And just a brief overview, I thought if we had anyone in the audience that would like to see what all the funds are used for. The incidental or general fund is basically anything that's not used in one of the other funds. The teacher's fund is for certified salary and benefits plus any contracted education. Debt service is your principal and interest payments on your bonded debt. Capital projects is equipment. It can be lease payments or construction payments. Now we would have time for patron comments.
One more question, just going back 2 slides. Property taxes, is that all property taxes, or is that just residential property taxes?
That's all.
Okay.
So
I
that
thought it
would-
was a higher number than that,
Yeah,
that was all.
So that would be what we consider current and delinquent taxes, but that's the total budget. That includes the debt service fund in there when I calculated the 66%. So it's not just the operating budget, it's the total budget.
Okay, thank you. At this point, I'd call if there are any other board members who have any questions or comments? And if anybody from the audience has any questions or comments? Okay, hearing none, I would just say thank you very much for that very, very complete report. And presumably the slides, if anybody wants to later look at them, the slides will be available online.
They are.
They are available online, so good. Thank you very much. At this point, I will entertain a motion to adjourn the meeting.
Motion to adjourn?
I will second. Your choice. Okay. All those in favour of adjourning the tax rate hearing meeting?
Aye.
Aye. Anybody opposed? Okay, that passes. Thank you very much.